Hey folks, Dan Frio here with your market update for February 15th, 2024. What we're going to talk about in today's video is retail sales, and some economic numbers came in this morning and they were bad, but not as bad as the Fed hoped, I guess. And then we're going to go over the jobs numbers. Are they bad? They're kind of bad, but are they bad enough? Because everything is pivoting around the Fed, which is completely crazy. So if you're kind of confused on what's going on, stay with me, because I'm trying to figure out and help you guys figure out what the heck's going on with mortgage rates for this week. So without further ado, let's get over to it. So yesterday I called this and I said, okay, what you're going to see with mortgage rates in the 30-year fix especially is based on the economic news came out to yesterday. I said mortgage rates are going to ease down just a little bit, probably about 5 basis points. I missed it, folks. I'm sorry. It was only down 4 basis points. But what you're seeing over here is the top 6 products people use when they're buying their first house. Okay, the gist behind all this is Mortgage News Daily surveys lenders all over the country, and they're like, hey, if you had somebody looking to buy their first house, it was a single family home, and they were going to live there, but they needed to have a 780 credit score and putting down 25%. That would be the rate. I can almost assure you, I don't know if I have any borrowers that are putting down 25% and have a 780 credit score. So if that's you, basically this is going to be where your rates are. If that's not you, I'm going to give you all my information at the end of this video to reach out to me, because I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. I'd love to help you. So without further ado, let's get over to the economic news that we have. So let's try to make some sense of this. Okay, so far out this week, we had the inflation numbers on the consumer side, which is the CPI. Okay, at first glance, I thought these aren't bad numbers. These are actually pretty good numbers. But the market, all of a sudden, I looked at my phone. The Dow Jones is down 500 or 600 points right out of the gate. Mortgage rates spiked to about 0.25% instantaneously when these numbers came out. And I'm like, what are people looking at? So I looked at it, and I first looked at the CPI year over year. That's what I normally look at. It was 3.4. This is the number the Federal Reserve wants to get down in the twos. Okay, they thought it was going to go down to 2.9. I kind of thought it would too, but it actually came in at 3.1. But it went from 3.4 to 3.1. So that means it went down 0.3. Okay, so I'm thinking that's great news, right? Well, if you look month over month, the number went from 0.2, is expected to stay at 0.2. It actually ticked up 0.1 additionally to 0.2, so it went up to 0.3. Okay, and then the core went from 0.3 to 0.4, and the markets went crazy. Okay, so now I was like, okay, let's stay steady. I'm not locking in anybody because I got a feeling that all this is overreaction. So we held on the sidelines. Yesterday, we came back quite a bit, and today we're coming back even more. Let's go over today's data. So the first thing that comes in today is core retail sales. It's plummeted. It fell off a cliff. Okay, last reading was 0.4. It was supposed to cool off to 0.2. It actually dropped all the way down to negative 0.6. Okay, so the first thing you're thinking is, okay, this is bad for sales. It's bad for companies' revenues. It's bad for companies' profits, right? So you'd think the stock market would plummet. Well, I'll get to that in a second. Then you see initial jobless claims. It's basically staying steady right here. So that's, let's say that's neutral news. All right, so let's see how the markets are reacting to this. First thing we want to look at is the Dow Jones and so forth. So it says retail sales tumble 0.8% in January, much more than expected. Again, first thing I'm thinking is sales is plummeting off a cliff. That means people aren't going to buy stuff. That means corporations aren't going to earn as much money. Let's see what the Dow Jones is doing. It's actually up almost 200 points. Okay, the NASDAQ is off. It's all AI generated right now, but we look at the Dow Jones and the S&P, they're both up. All right, which is a conundrum there. Let's go over the bond market. This is what I watch on a daily basis to figure out what the heck's going on with mortgage rates. Well, we watch right here. Why do we watch this? So if you're new to the channel, how you really pay attention and figure out what's going on with the mortgage rates, you have to know what's going on with a mortgage bond. Okay, you don't want to follow a 10-year Treasury. You don't want to follow the federal funds rate. You don't really want to follow anything other than the MBS market. This is really hard to find. So all you need to do is watch me every morning about 8 minutes, and you're going to get a whole day full of real estate information. What you're seeing right now is the MBS prices are right here. It's at 100.5. It is up 0.19. What does that mean? Well, all you need to know is this. If the MBS prices are going up, that means the yields or the rates are coming down. Let me explain this to you. I try to do this once a month. Let me make it in its simplest terms, how I can show you when the price goes up, the yields come down. Okay, so let's say, for example, you're buying a bond and it's a mortgage-backed security bond. All right, the face value of this thing a year from now is $100. Okay, so when I turn in my bond, I'm going to get $100 back. All right, so let's do a low price. Let's say today I give you $50. All right, I give you $50. Next year, I hand you my coupon back. So I give you $50, you give me my coupon. All right, next year I give you the coupon. I'm expecting my $100 back. You give me $100. Okay, I paid you $50 and I got $100 back. What was my rate of return on that bond? It was 100% because I gave you $50 and I doubled my money. Okay, so now let's reflect that price going up. I'm going to show you how the yields come down. So now let's say I pay you $100 for that bond. If I pay $100, you give me a bond. This coupon's value is $100 when I turn it in. Okay, so I wait a year. I give you my coupon. You give me my $100 back. So I paid you a higher price, much higher price. What's my yield? Gave you $100. You gave me $100 back. 0. So do you see how if I pay a higher price, it drives down the yields? That's basically how it works. So today we're going to probably see a reprieve. We'll be back in I'm expecting the high sixes, 6, 9 something by the end of today based on all of this information. So the next thing I want to do is it's like every video I watch is basically nobody in the world can afford a house right now. Nobody. Doesn't matter where you live. Many of those people I have to expect are coming from areas that are really expensive. So let's just pick out a place in the center of the country. We're actually getting a lot of business from Ohio, West Virginia, Pennsylvania, the Carolinas, the middle of the country that's not as sexy as California, Texas, Arizona, Florida. So let's kind of take a deep dive into, I pulled up Kansas, okay, right in the middle of the country. So if you break this down, let's look at some of the houses in Kansas for sale. You got $297, nice ranch for $199. You get a nice little house right there for $299. Look at this place, $270 for that place, $339, $349 for that ranch, $290, $180. Look at that house, $180, $299, $275. Okay, so look at these houses. So let's say the average house here is what? $280, $250, $260, $270. Well, let's see how far out of whack is the pricing. So we go over to here and let's say we bought a house for $250,000. So that was kind of the norm in that area. Let's even say it's okay. That's $270,000, $275,000. All right, let's see what that is. The house payment's $2,400. All right. So, well, I got it for purposes on this purposes. Let's keep it at $250,000 because I already have a couple other formats set. So the rate's 7%. So this is basically where we are right now. So if rates come down, this payment's even going to get a little bit less. Okay, so we have right through here that principal interest, your total house payment will be $2,190. Okay, well, if you go over here, what's the average income in Kansas? Well, the average income, so let's say for a two-couple family is, what is that number? $79,000. Let's say $80,000. Okay, so you have a family that makes $80,000. Divide that by 12 is $6,666 a month. Okay, we take that payment that they had, the $2,190 that we had right through here, $2,190 for the $250,000 home. Okay. We go through here. What would be, how much of your income would it take to make your house payment? 32%. That's not bad. That's not bad at all. Historically, that's not bad at all either. But I can use these numbers, or I can manipulate numbers to make it seem like it's virtually impossible. Yeah, you can go to Southern California where starter house is $600,000-$700,000. I can't afford that. Okay, so most people can't. But if you look in the areas that maybe aren't as sexy, there may be some value there. So we're having fantastic months so far this year. People are finding values out there. So don't just think, if your area is way too expensive, maybe it is the best for you to rent. But there are many areas of the country that are affordable for people if they want to put their families into a home. I'm not saying you have to. I'm just saying I'm trying to debunk a lot of the news out there that a lot of people have. So who am I? What do I do? Well, my name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. I'd love to help you if you're trying to navigate in this market to maybe buy your first house, maybe your first investment property. You want to see maybe, can you refinance, pull some cash out to pay off some bills, home equity loans, reverse mortgages. If you're looking for any type of mortgages, we would love to help. How can we do that? Well, there's 3 ways to reach out to us. One is hit the apply now button. You're going to answer a few questions on that. Then we're going to route you to a mortgage specialist on my team. Guys, we only have 3 people. There's me, Alan, and David. So you're not going to a telemarketing center. You're going to talk to somebody right here in my office. That's what you're going to do is if you hit the apply now button. However, if you do want to talk to us immediately, what do you need to do? Scroll down to the bottom of our website. The website's therateupdate.com. We're going to scroll down through here. You're going to see blogs, mortgage calculators, and the whole mix. You're going to see our 800 number as well as my email address. So here it is right here, folks. 800 number is 844-775-LOAN. Please give us a call if you want to ask some questions, kick the tires to see if you would qualify. Or you can even email me directly at dan@therateupdate.com.